Good morning. All right. Missed a day and new all-time highs. Wow. Let's see where this is going here. Well, looking at the S&Ps, we've got, well, everything is up, right? Uptrend, right? Daily uptrend, weekly uptrend, daily uptrend, right? We had things moving sideways and now they've broken out. And we've gotten, well, we say, not that we've gotten, we had the sideways consolidation, choppy type of sideways consolidation to in different ways. This was, this one was kind of more of a upward grind versus something that went sideways. Thank you, Alex. So, you can see the red bars that were ignored. They were the clues of buyers taking control, buying on the dip, and so on. And one of the things that I mentioned last week was while all of the technicals were saying, look for new all-time highs and the ones that were relatively close, I did point out that the internals were getting to a point of, suggesting it won't go that far before some type of corrective action. That doesn't mean it's going to crash back down to the bottom of the trading range at all. It just means, when you're thinking about should you buy a breakout, looking at internals, they kind of support whether, this thing's going to start a big run or whether it might be a little, might be some short-lived before some corrective price action. And we never know the extent of the corrective price action. That's, I guess, the main problem. But money management will take care of that if you just, do it intelligently, is to, if you to buy this breakout to new highs, don't go all in, meaning like, your sweat point, is down here below 3,000. Get in like a half or a third, and then look to add to it as the correction that will come is upon us. So is it here now? And well, there's no evidence of that yet, but we'll go through the other markets. But let's look at those internals and look at what we refer to as the wrong way option traders. And they're doing what they typically do, is get all in on a move that begins to happen or becomes so evident to everyone that, technical trader 101 that just opened up his new TradeStation account can see it's going up, right? And there's something good going on here. Now, it's got a little bit more room to whether it can peg, this moving average can peg the upper band and this 0.80 level. You could see over here, it came in kind of hard at that point in time, but this does not equate to this, right? Different things were happening over here than they were here. It doesn't mean that, when those numbers are the same thing, you're going to get the same result. Now, we've got the breadth, which is kind of lagging, which means, it's not so broad-based. The breadth topped out over here, and as it's gone up here, this has been flat. And as you can see, the day-to-day breadth is actually almost non-existent, besides kind of like a little trend to the downside, but just kind of dangling around there around the zero line. But the one-way option traders, they're seeing it going up, and they, for them, they're doing the right thing, but they're going to be overextended on their positions at the worst possible time when this tends to come in. And you could surely bet that the call premiums should be getting inflated as this thing goes up. So buying calls at this point rather than waiting for it to dip, not going to be such a good idea, I think, in a short amount of time here. So, but what we would like to see as a better signal of at least, hey, here's a pullback. Is this thing to actually pop higher? And I'm not saying that this thing has to come down today, not at all, even though we've got a lot of stuff that, is down here today, some more than others. But if this thing was to pop higher, get a little more extended, and the breadth actually kick in to the upside and that get up there, that would, to me, be a no-brainer that, start looking for what was showing relative weakness as shorts, look for what was running up that might be climactic sells or what might be M tops. So internals don't tell us what to trade. They tell us, caution, caution Will Robinson, or hey, there's some gas left in the tank here. So, you see something, go ahead and do it, but just be aware that we're not at the beginning of a new move, right? Whereas, sometimes things, they come down to a prior low and we get the internals like we did here with a little bit of a bullish divergence and so on. So they're at the other end. So that's the story there. Let's clean this up and move on. Everybody knows where we're at from that point of view, and we'll look at the other markets. Nonetheless, it's coming out of a trading range, right? We've been in this trading range for several months, wide, whippy trading range, influenced by China and for the most part, and interest rates, which we're going to get some reading on that this week as well as Apple earnings and some others. So we'll see where that all goes. Nonetheless, weekly up, daily up, hourly up. And Qs here, breakout, new all-time highs, up, up, up. All right, got to change. We'll just take these away. The theory is that pullbacks now to these areas that were resistance should become support. So there's pretty much the area of the breakout if it does pull back. And this is what I was talking about as far as the sideways corrective action that I talked about in the S&P. So let's just go back and look at that for a moment. It's a good lesson in recognizing a concept and how it forms in different ways. You see this one I said was kind of churning up there, and then it broke out above the highs where the Qs were going sideways at the highs with wider red bars down that were negated. And this was a more powerful setup. And you see what happened, how it came out of the blocks here when it gapped down the wider bar and then the push higher. So it was the better setup. And you can say, well, technology and whatever did well, yada, yada. But this is just a lesson in price action to observe the nuance or difference in the way bullish price action occurs at resistance, comparing the spiders versus the Qs. And the diamonds, they are the laggard. This is a bad tick, but they're holding up here. So they're the ones that could be bringing up the rear. Maybe stocks within the Dow, those might be the ones that bring up the rear. And, the real party hats go on CNBC when the Dow pushes up to new all-time highs. You see is whatever they're reporting. You hear much talk about the Dow. No, it's about the S&P and the NASDAQ. But if the Dow can make new all-time highs, well, then they have what the media wants to hear primarily. The media, the people that turn on their TV at night, feel good about the markets and, new all-time highs. Everything's fantastic. So we'll take a look. Futures, S&Ps, as they should be, breaking out of that range. Nice push up, wider range bar. And so far, we start the day with a little inside bar of consolidation. So you see the way it looks here on the hourly chart. This could easily move up. Right? So we look at the futures in the morning, just realize it's the beginning of the day. I know I'm stating the obvious, but sometimes there's new people that are watching, and we're seeing the charts here. And this red bar at the moment, this could turn into another green bar and be up here at 3,060. We don't know. What we do see is that there was a little blip lower into what was resistance, became support, and buyers stepped up there. So the price action is still bullish overall, even though this very bullish price action would have been this consolidation to result in a breakout to the upside. Well, it came down, and then buyers said, well, let's pick it up down here at this support level, and you see the bottoming tail bar, and now it's beginning to stabilize, and we'll see if it can get back up here. If you can get back up here, the assumption is it keeps going higher. If it breaks below here, shorts probably have something to consider. that this could go down to, the gap fill area down there. So we'll see. Right now it's building a little shelf, so we'll see which way that goes. NQs, the stronger. Notice it did not get down here, got kind of close, but buyers stepped up a little bit before that. And that's a tell in of itself when, whether prices come all the way down to what was resistance, where they're going to buy, where the bids are down there, or do they bid above that area, which tells us that they're a bit more aggressive to pick up shares. In this case, those contracts. And we got a nice green bar, and now we'll see if it can push up through there. But, realize it did come, quite a ways in a short amount of time. Also notice the topping tail, the back off from that area, and then, the ability to get through it, it becomes much more obvious how buyers are in control. But, seeing these red bars being ignored and topping tails being ignored, there's definitely something that we take notice of to say, hey, you know what, look at the size of that red bar. And this retraced almost completely into it the next day. The institutions don't care about big red bars, right? Maybe they do have somebody reading candlesticks and so on, but they're also looking at higher time frames and saying, hey, the higher time frame's up. And this is what we call the transition from red to green. And as intraday traders, the way we do that is, with a bias of the higher time frame, when we see the red bar at support where there's bullish price action, we then can go down to the hourly or maybe a little smaller time frame if you choose to look for, say, even this kind of price action right here. So we take the same price action that occurs in higher time frames and we apply it in a lower time frame at the appropriate time. And YM, we know, is the laggard, little red bar today. Same story, meaning it's testing some support here, and we'll see which way it goes. Today may just be a consolidation day. Some earnings coming out, and then the Fed tomorrow. So we'll see. Russell, it's getting there, right? It's getting there. We've been looking for this to play catch up, and it's been slow. At times it looked more so if you look at the Russell, the ETF on this day, where it gapped up and it didn't move like the others, but then the red bar was ignored. And we got that 180 reversal. Yesterday it pushed higher. And as it gets closer to the top of the trading range, with our internals lined up as they have, as explained, sellers are going to show up there. And this is a good example of being very careful. If this makes a new high above the trading range, it's more likely to be a peekaboo that comes right back in again. Now, just keep that in mind. And okay, so now, again, this could turn out to be a 1, 2, 3 continuation. And 1, 2, 3 continuation, wide range bar coming out of some consolidation, inside bar. Remember, this is bar is active. It's brand new day. It doesn't have to look like this at the end of the day, but if it is, and then it takes out that high and we look for it to push higher. And so the ideal ones happen at the bottom of the support. And while this isn't your textbook 1, 2, 3, the idea of it is there. W bottom, wide range bar. Just imagine this without a tail. And then the body is inside. So that's your continuation pattern down there. Oil coming back in, it's been flip-flopping, but looks like it's got a low in place here, down here at the lows. Hit this resistance yesterday, and now it's coming back in again. So not ultimate confidence to push it through on the first shot, but now that it's pushed up here, ideally, we should see buyers come in somewhere in this area here. As this pulls back, this should try and make a turn over here through this bottoming process. So we'll see what that happens there. Bonds, getting down towards support. We've been talking, right, for quite a while, back and forth, about keeping an eye on bonds and its different levels and whether it could get through a level or whether it held a level and how that inverse relationship with equities has given us pretty good guidance, even intraday. So as we come down into this area, and it is an area, right? We typically look at this and say, well, you know, it'll come all the way down to the low. Well, sometimes it doesn't. Just like when we looked at those Qs a little while ago, they didn't come all the way down to that support. Buyers stepped up ahead of time, and that gave us a clue of the aggressiveness of those buyers. So maybe if this makes a turn here, this would be something for you to watch that would suggest that equities might have a little bit of a corrective price action if bond prices start to pop up. And you can watch, you know, TLT if you don't have the futures, and you can see how they've gapped up here, and they are down and they are near the support, which is right here. Makes sense for buyers to step up. So equities might have a little bit of a hard time here in the next few days, and the uncertainty of, you know, the Fed announcement, you know, and even if they do, everybody expects them to lower interest rates. Even if they do, what are they going to do for an encore at this point? I think if they can have to continue to lower interest rates, I guess that's liked by the markets, but probably going to be a tough sell as far as it being bullish if they have to continue to do that, but we'll see. Gold, I mentioned last week when things were starting to look positive, while this looked great, and the weekly does that if equity started to rally, this was going to suffer a little bit. And that's exactly what happened. It doesn't mean this weekly chart's been negated. It still looks like a bullish consolidation that could get turned around. But as equities have begun to outperform, you know, gold buyers have stepped back a little bit here. And so I still think, you know, based on the weekly chart, it'll be fine. Right? Can I look at shop? If not now, later. Poising what I see. Sure. Take a look. I got a little time here. I typed in the wrong thing. Double bottom, weekly chart, you know, had a correction. This is what I call repairing the damage. This is not a good sign. Let's see your chart that you posted here. To move up to that level there. Based on this, yes, but I guess there's some news. I don't know if it's reported earnings today, but this is down, right? Well, that bar's 20 points. This bar's more than 20 points. Yeah, it's on earnings. So it's right back down to the lows here. Let's see if buyers want to step up and pick it up here and hold the lows. You know, like an Amazon story. Amazon was down, what, 100 and something points, and buyers stepped up and ripped it right back higher. So clearly this was being bought in anticipation of good news. News wasn't so good, so now it's down here. And those institutions, you know, the big money has to reconsider their positions and whether they want to say, hey, new opportunity to add. And, well, I guess we'll see if they do. I mean, it's come off the lows a bit here already, right? That probe down there was pretty deep and back up. So if it can chop around, maybe it can, you know, they'll save the day. And we'll see where that goes. Silver, same stuff as gold. You know, it started to outperform, came back in, but keep an eye on Bitcoin here, folks. That is an igniting bar, and then it gapped into 10,000 resistance. So that might have a lot more work to do, but that is an igniting bar. And I don't know about the volume, but was it GBTC? You can see the blast off there, you know, this correction down toward this level of support and this blast off. So this might have some chopping around to do, but that certainly looks like the start of something. Well, maybe we will be looking at this for a buy on a pullback. That's it for me, folks. Take it over there, Dan.
All right, good morning. Yeah, and that Bitcoin, Greg, you need to release the screen. That Bitcoin also is a buy setup, bottoming tail on the monthly. And a nice weekly reversal engulfing on the weekly. All right, we're actually flat in the weekly options trader. We have a lot of opens in the swing ladder, but let's go right to gappers. All right, I lost my chat box again. Greg, you helped me the other day when I lost my chat box. It was in a loose window, and I just minimized everything, and I don't see it. Where is my chat box? This is annoying. I mean, I can't operate if I can't see your questions. So I'm gonna X out.
I'll handle the questions now. Just go through the charts.
Well, I gotta fix it, but okay.
I mean, just click on the chat thing.
No, I did.
It's probably underneath something.
Well, I finally just got it by clicking everything I could. All right, I got it now. Okay, let's go. Let's do gappers. AU actually was a gold stock, reverse head and shoulders breakout here. Then this gold came in. I don't know if this is earnings, but it's a bearish gap now, but nothing to do with it. XNet, I think a little Chinese stock maybe. Wow, look at that move. Now it's down to $5. Nothing to do with it though. So McGraw emailed me saying NXPI, good earnings to 114. So that is a nice big old gap. And he said that's a competitor, and that's why I have ON here. If this gives us a 1, 2, 3 McGraw, then looks great. You know, maybe to 2250 or whatever. ABMD. With this, I don't know if this was earnings or what, but a little bottoming pattern there. If it can negate the gap down and then take out yesterday's high, then I would like it, because then it's a bear gap negated breakout. It's kind of like it'd be like a bottoming tail, a downside shakeout. Kellogg 62.85, just gap and resistance, nothing there. Corning $31, that ain't bad. You know, this, you know, I know the 200's right there, psychological, but it still has a price void to push further. 32, 32.50. I'll put that in a window. That ain't bad at all. ECL gapping down 188. That's a bearish gap, maybe 30-minute low. COP, it's a big mess. It's a oil, obviously. CMI. Now, see, I would never hold an earnings stock that is up, you know, 15 bars in a row. That's just stupid. I mean, could it gap up? Of course, stocks can do anything. But that's why one of our opens, HFC, we had this as a kind of, I don't know whether you call it core or just a big target, it doesn't matter. But I said yesterday, because it has earnings coming up and we're in this at a beautiful price, that I decided let's not hold it over earnings. Another oil, Bravo Papa, had a reversal there yesterday at resistance. Nothing to do with that. CSV, big trading range, top end of the range. I can't tell where it's gapping. CGNX, 51 bucks down here. So now you got support below, resistance above. It's nothing to do with that. HCA 132. It's a bullish gap. Resistance over here. Remember, I'm looking for tier 1 candidates, which are they're ready to go into the batter's box. They're rested, they're multiple time frame alignment, and then these other ones we'll just come back to within the first 30 minutes. 2780, a bear gap here, but again, it's not tier 1. MA 277.80 is, you know, up 3 bars, gap in resistance, got no interest in that. Merck 84.29, gap in resistance, but I like, look, you got 3 reversals here at the 200, 3. So McGraw, it's gapping over these. This is a put spread candidate. See if we can do, now on something like this, I just look at the real bodies. So see this red real body, green real body, and then I just eyeball to the 81s. These don't need to be under these tails, because if you drill down to an hourly, these real bodies are going to be where our stop is, under 81. So McGraw, hint, hint. Pfizer, and that's a nice bottoming pattern. I'll put that here, but it's coming in a little hard. I just saw wind there. We had wind yesterday. I was trying to do a put spread for the weekly, and it did not get filled with the gap up. NOV 22, maybe 30-minute high. It trades very sloppy with all these overlapping bars. I like our HAL or whatever oil stock we're in. RE, I can't tell where you're gapping. We'll come back. Rig 471, it's flat. It would have to be over last week's high. And then it could go to 550, which isn't bad, it's 10%. TCF, I can't tell where you're gapping. Kind of a huge, big old retest pattern. So McGraw, this will be a no-brainer if you can do a 36 put spread for next month. Yeah, we're going to get them all. AVP, nothing to do there. Akamai, wow, that is like the heart machine. It's in a trading range, but that is sloppy, sloppy. Wow. All right, here's our grub. Grub's getting shellacked. 39. Wow, look at that vertical move. You think that was climactic? When you get just, you know, it's gapping down 38%, you just got to put it in a window and see what happens. I have no idea what's going to happen with grub. Beyond saying, but that's a bearish gap. That's a bearish gap, and it looks lower still. Remember, we're shorting this. You know, that's a beautiful head and shoulders 2-bar reversal. I need to put that in our MT live tomorrow, because that's a green bar. That's a green bar ignored. Green bar ignored. Cracking head and shoulders. And so for beyond, look, bearish pre-market. This poor thing looks lower. And they also, you know, they had earn Qs are popping nicely here. Wow. Facebook, Amazon, MTRX, nice gapper there. Somebody was, Rick was saying, hey, can we expect Google to do the same thing Amazon did? I typed earlier that I have no friggin' idea. We have to watch and look at the evidence and see what happens. And so I have it on my other screen, so I'll just leave it there. But if you go back and look at Amazon's day pre-market, it started just ripping. So let's look at Amazon from the other day. I don't know why it's not showing the pre-market. Oh well. All right, so MTRX is a bullish. That's a bullish gap. And that is bullish pre-market setup right there. But it's 932. So your trading plan, you got to ask, how aggressive do you want on board? And I just don't. We do sometimes, because I even pre-market say, you know what, everything's lined up so beautifully, just buy a half lot pre-market. GM